Hi, and welcome to Success Wealth. Our journey continues today, where we're looking to everybody here to grow your wealth. Today, we're looking into the world of crypto. It's an interesting place where there's a lot of different emotions, opinions, but really today we've got someone who's actually working in the industry, working closely every single day in the economy that is digital assets that's coming about, that everyone's probably heard about, but not too many of us know too much about. So today, Lan is going to join us with William Wright, the founder of Mining Store, and he's going to talk all things crypto. That we'll just jump straight in and introduce him, get to know him, and we'll go from there. So, Lan, how are you today?
Good. Phil, how are you? How are you, William?
Yeah, very well. Thank you very much for having me on this show. I love people that are getting in and about their education and trying to get people more knowledgeable about this space and, showing them the benefits of it. So do you want me to give a quick introduction of how we started off at Mining Store and what we're all about?
That'd be fantastic.
That'll be fantastic, Will.
Yeah, for sure. So my crypto journey personally started probably around about 2013, 2014. I considered myself maybe a little bit of a nerd back in high school. Me and my best mate and co-founder of Mining Store, Cal Cameron, we were into gaming and computers, and we learned through the online web, through Reddit and the rest of it, that you could mine cryptocurrency with the computers that we had. So that's kind of where things started. We started off, just earning what back then seemed like a tiny amount of Bitcoin. And today we're very grateful for those coins that we still hold some of. Probably shouldn't have sold some so early, but that's the nature of investing. And we kind of were doing it as more of a hobby. And then obviously coming into 2017, things picked up a lot more. I was actually working in foreign exchange broking, and a lot of the clients that were coming through the business that I was at were interested in gaining exposure to cryptocurrency. So I was very lucky at the time, from my experience and my age, to have some high net wealth clients be pushed onto my desk at the time, as I was more experienced compared to the average person in cryptocurrency. And then from there, me and Cal really started to ramp up at the time it was GPU mining, and we'll talk about later the different types of mining. But at the time it was graphics card mining, and we were really ramping that up at the time. It got to the point where we were making more from our mining operations than we were both at our day jobs. Cal was working as an accountant. And so we decided to put a bit of back and bone into it, left the jobs and kicked off Mining Store. So today we are hosting quite a large community of miners. Pretty much anyone that's purchased mining rigs through us, we have pushed them through into our community so they can share their ideas, expressions, different mining strategies with each other, and help each other grow in the space. And we're also Australia's largest supplier of cryptocurrency mining hardware. The other element to our business, that's what I'll call pillar one, is our community and our trading side. The other element is our hosting side. So not only do we supply the mining rigs to our clients, we actually also have fairly substantially large hosting facilities, which have some of the cheapest electrical rates in the world. And that's kind of where we get our edge, making mining actually profitable for our clients. And the last bit I'll tap on there, I think a lot of people that are coming into cryptocurrency or going straight into mining, they're usually put off a little bit by the electrical costs, and they don't see how they can make a return. And that's been kind of the cutting edge for us, is really securing those facilities with less than 10 cent US per kilowatt hour power rates. In Australia, probably paying over 20 cents. And that's basically what we do as a business as a whole.
You're an early adopter then.
Yeah, fairly early. I didn't get in at 2009, but I definitely had some exposure early on, and I've stayed in the space since.
So who can get into mining? I mean, you mentioned an accountant, so do you have a need to have a specific skill set or in IT or something that can be learned?
I think the people that tend to get into it themselves without approaching a business like Mining Store will tend to be that IT background, electricians as well. They usually, come across someone that has really cheap power, try to put some business idea together, how they can take advantage of it. People with solar electricity, people with renewable electricity, but really anyone can get involved. And that's pretty much the sole purpose of Mining Store, is to make something that may seem not accessible for some people or may not be as viable for some people, really simplify that down, where we basically get your miner set up, make sure that your wallets are all set up, and pretty much turn your miner on so you start earning cryptocurrency. And then we also connect you with our partners such as Mind Digital, who have been a phenomenal part of our business, and Crypto Tax Australia. Mind Digital is where you'll be able to send your cryptocurrency, sell it for Australian dollars, and get it straight into your bank account. And Crypto Tax Australia is where you'll go to have a consultation to make sure that you're setting your mining operation up to best suit your tax needs. And that can be, some people think that it's best to do it as personal, but really it might be better for them to run it under a self-managed super fund. It might be best for them to run it under a business, an existing company. It really depends on your circumstances. And we leave that interesting stuff to the tax man himself.
You mentioned that you can mine Bitcoin for yourself rather than the normal way of buying it on CoinSpot, or which is our community is probably the newbies are asking CoinJar, CoinSpot, which platform to buy. So Bitcoin is going for, I think, 27,000 or 26,000 something at the moment.
Yeah, Aussie. I always reference in US dollars. Once you get fully engrossed in the crypto market, usually you're only talking US dollars, but 26,000 sounds about right.
You have to convert it so that you make sure you're making money. So how much does it cost, or like equivalent, what it would be the average cost to mine a Bitcoin over time? Obviously it has to be worth it for the miners.
So really good question. I think the start of that question basically is some people can buy cryptocurrency and other people can mine it. And a really important thing to understand is, particularly with the Bitcoin ecosystem would simply not exist without mining. And essentially the first coins that ever were injected into the economy were the coins that were mined. So I think, Satoshi mined the first coin back in 2009, I believe. And that was when the first amount of Bitcoin was injected into the ecosystem. So there's only ever going to be 21 million Bitcoin. At the moment, getting close to 19 million Bitcoin have been mined. And essentially over the next probably 100 years, because it reduces the amount that is injected into the economy through mining, we will start to see that full 21 million mined. Now, when that happens, what is going to happen is every block that is created after that, the miners will receive a reward, not from the reserve that's left over out of that 2 million left, but it'll come from the transaction fees. Okay. So on to the second part of the question, now that it kind of explains what mining is, why it's important, how the miners are currently getting revenue. The second part of it is how much can you make through mining? It really is how long is a piece of string. It can depend on what price you get your miners at, what cost you're paying electrical rates at. But generally speaking, what we're seeing is miners are in it for the long term. So they're not in it like a trader to buy Bitcoin at 20,000 and then, or 26 Australian dollars, if you want to speak in Australian terms, and then try and sell it at 30,000 Australian dollars for a 5,000 Australian dollar profit. We're in it for the long term, where we purchase an amount of hardware. Most miners will do things on a larger scale, but you can do it as small as one miner. And basically, the advantage of purchasing the miner is you achieve what we call like a dollar cost average strategy. You're not exposed straight away to the price of Bitcoin, where, as I said, you might buy at 25,000 one Bitcoin, and if it drops to $10,000, you've lost a substantial amount of money. When you buy a miner, and to keep it simple, you spend $25,000 on mining. You buy that hardware, and then every day you start mining a small amount every day. It might be $10, $20 for a standard Bitcoin miner, which is $5,000 hardware, or up down as low as $2,000 hardware. You might earn $5 or $10 a day. And every day you're getting some Bitcoin at $25,000, you're getting $10 worth of it. And then the next day you're getting another $10, and it might be you're getting small amounts at different prices. And in the long term, what you're doing is looking to hold that for the lifetime of the miner, and then sell it all, hopefully at the peak prices. Right now we're at a peak price. A lot of miners are taking some of their profits that they've been mining over the past 3 years since we've been in a bear market. And through that strategy, you basically take the psychology of a trader away, you take a step back from the market, and you gain exposure over a longer period of time. So there's a bit there. Obviously, viewers can go back and review that and look up some of the terms that they didn't understand. But for me, that has been the biggest thing from when I was at foreign exchange and trading with high leverage and watching clients put in $50,000 or $100,000 and, building that to $300,000, but then losing it all the next month, to shifting that mentality to allowing people to still go to their day job, but they invest the amount at the start and in the mining, let it passively do its thing in the background, and day by day just pick up coins over a 3 to 5 year period, and then sell them at a high multiple later on. And that's been how we've been so successful in the crypto market, and what we kind of advocate and encourage people to take an approach with.
Wow, what a fantastic and detailed explanation. Because I learned everything that you've explained, and I think you explained it really well. So thank you for that. And I guess, Phil, this is your area, technical. Did you want to ask anything about that side more?
No, that's great, because Will is explain the whole process there. But can you talk a little bit more on the returns on a daily basis rather than a long-term basis? And when you're taking a long-term view, the picture, a very different picture compared to someone looking to make daily income, because there's going to be moments, depending where we are in the cycle, is this right, Will, where your daily returns won't even cover your hosting and your electrical costs. But at the right time in the market, all that time that you were not covering those costs, it more than makes up for it.
Yeah, so there's definitely scenarios, and if we want to, I suppose what a lot of people will do when they come into the cryptocurrency industry, if they know about mining, they'll go, okay, should I buy miners or should I buy a cryptocurrency? I think that's what a lot of the viewers want to hear, is the advantages and disadvantages of both. So definitely with the mining side, it is more of a sit back, more of a passive approach, more of a long-term dollar cost average approach. There's one more thing I might get time to tap into, which is the compound mining strategy that you can follow as well. But whilst we're on this topic here, there are definitely going to be days with your mining where, previous months you were earning $10 a day or $5 a day. And then there's going to come to a point in the market where there's a big shift. Say, for example, Bitcoin's price drops from 20,000 to 15,000, and the value of the coins that you're mining on that day are not as high. And you're going to face times where you're only earning $1 or $2 a day, or as you said, potentially you're earning negative. The important thing to do is to remember why you got back into that mining strategy, and remember that it's to sit back and have faith in the market in the long term, increasing in value, and to not worry about these larger fluctuations. Now, obviously, by no means do you want to get in a situation where for a whole year you're paying more in electricity than when you're getting mining. Now, that's just a bad investment. And that's where we at Mining Story, as the experts that have been in this industry for quite a long time now, will help people not fall into those traps where, you've got a miner being advertised that it's earning $5,000 a day, and, it's only costing $400. That's a pure scam. Or you've got a miner that perhaps is real and it's been, released on the market, but there's only 100 existing of them. So of course they're getting a really high return, but then manufacturers come out and produce another 5,000 of them, and your returns get smashed. So there are things to be aware of, and there are bad investments in mining. The safest route for people who are not really interested in taking too much risk is probably getting Bitcoin miners. And these on average, they earn between kind of $3 and $10. They very rarely have been negative. Like they may be earning $1 or $2 at times, but they are a little bit more consistent. And the key thing to think is the exact same as a trader is you're trying to pick the price at a lower point in the market. For example, as I say, buying it at below 10,000 and hopefully selling at 20,000. You're trying to do the same thing with your mining, but the thing to remember with Bitcoin is it's a deflationary currency. It's a storage of value. And as long as you have faith in people adopting it and still seeing it as a storage of value, over time, Bitcoin should keep on increasing. And it has so far. I mean, we've gone from it being worth $50 to $100 to 3,000 to 5,000 to 20,000 back down to 3,000. But at the end of the day, it's still come back to 20,000. And it's starting to be more adopted by institutions. And I think over time, it's not going to become so volatile. It's going to start to lose its volatility and more gain its deflationary increase in value. And that's where the miners are going to kind of benefit the most, is from holding those coins and selling them at those kind of higher intervals.
Yeah, you've just answered my question, Will, about why the price of Bitcoin can drop 30% or 50% in a week's time. I understand with investments, share market, property markets, we have corrections, we have cycles, but this is almost unheard of, ridiculous.
It totally is. And even for me, like when, obviously I'm explaining it to my old man who was in financial services and treasury at ANZ, and they just are like, how can it be so volatile? It's crazy. But I think, I might have answered it, but I think the thing to remember is it is still so small, where it is still so young. It's not like there's quadrillions of dollars in this market. We're up to trillions, but it's still a very small market. And, whales, so to speak, can quite easily, or exchanges can dump a small amount of Bitcoin and change the price drastically still. It is still much more stable than what it was. Like, it's a lot harder for people to manipulate the price now. There's a lot more people that have it. I think at the end of the day, the beautiful thing about a Trezor is it's locked away. It's very hard to access those coins and quickly make an impulse decision to sell coins because we've retraced 15 or 20%. And I strongly encourage people, particularly miners, but even traders, to always leave a portion of their Bitcoin or Ethereum on those Trezor wallets locked away for the long term, for the 2 to 3 year play, and not listen to those drastic up and down changes, because emotions are very strong and it will catch you out. You will try and sell some at the top and then it'll push up higher and you'll buy it back and lose those multiples. And it's not worth it. It's particularly with Bitcoin, that's a storage of value asset.
You probably touched on it before. You mentioned that Bitcoin is the big one that people should look at, but there's other coins that you can mine as well. What else do you do? And
yeah,
not
absolutely.
all coins are mineable either. Can you talk a little bit about that and the differences?
Yeah, great question. So at this point, it's probably a good time to introduce the different types of miners, and they focus on different types of coins. So the standard one that I think at the start of the video I talked about was the GPU, the graphics card miners. And those were just like your desktop computer. That's exactly how I'd like the audience to think about it. It's exactly what it is. And today, the GPU miners can't really compete with mining Bitcoin. Today, Bitcoin is predominantly mined by what we call ASIC miners. And these are miners which are specifically built to mine cryptocurrency, and they are specifically built to mine Bitcoin's algorithm, which is SHA-256, okay? So there's no point to a degree, there's no point in turning your GPU miners on to mine it, because there's someone else that's specialized in mining it at lower power rates and much higher hash rate. Now, ASIC miners tend to focus on mining one coin or one algorithm like SHA-256, and they can't just, another coin pops up on the market. They can't just go, oh yeah, we're going to mine that. It's not designed to do that. So they're very efficient at mining the one type of thing. The other type of miner, and the one that Mining Store in particular have expanded on quite heavily, and most of our clientele are actually mining with, is what we call an FPGA miner. An FPGA miner is, think of it as the same as an ASIC miner. It is built to mine cryptocurrency, but it's reprogrammable. So if a new coin does pop up on the market, we can create what we call a piece of software called a bitstream, and that actually allows us to mine that coin, okay? So Digibyte, CKB, all these smaller cap coins that come out on the market, what tends to happen is when they are first released to the market, the FPGA miners are incredibly profitable at the start, because we can build a piece of software much faster than an ASIC miner can build a piece of hardware. So we quickly build a piece of software that allows us to mine and get the highest returns at the start. But then what happens is once that coin develops, for example, CKB, Nervos CKB, which some of the audience might have heard of, and Digibyte and Handshake and all these coins, once they become fully developed or they're not just another gimmick coin, the ASIC manufacturers will come out and build a miner for that coin, and it will perform at 10 to 20 to 30 times the hash rate that what the FPGAs are. And then the FPGAs, we will cycle on to the next new coin that comes out. So to summarize that there, you've got GPU, you've got ASIC, you've got FPGA. GPU is probably your average Joe Blow who's not really in it for profit, a bit more of a hobby, just wants to get a couple coins, have a bit of fun. Your ASIC is probably for your really large commercial miners, or for people that they don't really understand the market, but they know that crypto is going to be the next biggest thing, and they just want exposure to Bitcoin mining. We'll get them set up on ASICs. And then FPGA are for people who are a little bit more experienced, and they want exposure to those smaller cap altcoins, and they're willing to put in a little bit more effort to choose which coins are most profitable to mine. So yeah, that's probably the best summary I can give of different types of miners and the different strategies you can kind of follow there.
So you help people with their strategy? Like if someone comes to you, depending on their budget, you would help them through the processes and maybe not allocating to all one thing, diversify into different things and help them through that process?
Yeah, absolutely. So we've expanded quite a lot since we first started. We have dedicated experts in the mining industry. We offer 30-minute free strategy calls. So what we tend to focus on, and it's a key reason why we adopted the community side of things, is because we really want to educate people on their options and educate people on the market before they make a decision to start mining. Our audience needs to understand that, like I explained earlier in the call, that mining is a long-term game. It's not trying to buy something today and it turn into multiples tomorrow. It's really dedicating yourself to that 3 to 5 year cycle and mining throughout it. So in terms of your question, do we help people? We give them a lot of education. We give them a lot of advice. We make sure that they understand. We make sure it's right for them. Mining's not for everyone. Some people, it's simply just not going to work out for. So that's kind of what we do, is we tell people exactly what their options are, exactly how to understand how the profit works and what the strategy is. And then from there, they usually start with maybe 1 or 2 or 3 miners. And after that, what people tend to do is follow our compound mining strategy. And this is something that I mentioned earlier that I think is a major benefit of mining. When you mine, you can buy, let's say, for example, you start off with 10 miners that are earning $10 a day. And then, over your first month, you might make, $10 a day on each one of those miners, times 30 days is around about, say, $3,000, okay? Each miner costs around $3,000. So at the end of that month, you can then go and buy another miner, and then you've got 11 miners, and then you're earning an income of 11 miners. And the next month you can maybe, after 3 months, you can actually buy two miners because you're up to 15 miners or 20 miners. And you can compound this investment for the first year of mining, and then you can leave it as is. And rather than earning the income you would have been earning off 10 miners, you're earning what you would be off 20 miners, but you only ever paid for the first 10 miners. So obviously there's a couple of things that need to go right in that scenario. You need to earn an average of $10 a day. It's an example. It's not, this is a proven strategy and it's going to work every single time. You need to be aware that there is fluctuation, and you need to sell your coins at different points in time. But it is possible to compound out your investment, as opposed to just buying, $15,000 worth of Bitcoin that goes to $30,000. You could have bought $15,000 worth of hardware, expanded that out, and then increased your income as well. So it's a little bit more complicated, but that's something that we explain in quite heavy detail. A lot of our larger clients who start with 10 miners and then they build up to 20 miners and then they scale up to 100 miners, and that's what we consider a mining farm at that stage. They have followed that strategy and it's been very successful. But other people, they come in and they want to start with 1 miner and they just want to get their return on investment on it, and then make a little bit of money as they keep going, and that's totally fine. It's different strategies for different people, and we're here to offer the different types of strategies and the knowledge, and then obviously streamline all that with our hosted mining facilities and our maintenance support and everything to make sure that people aren't buying something and then not knowing how to use it and get the advantage out of it.
People hear a lot about, like you mentioned, these big mining farms and things like that. Can you give them a picture? Like, can they still profit and still be profitable just having a few or having a small set versus these big farms, that are set up specifically to do this? Like, how do they compete in the whole world of mining and still make a profit?
I think the best way that I can explain that is just like Bitcoin, a mining farm can be fractionalized. So the best way for a trader to understand this would be, can you still make money out of Bitcoin by just buying 0.1 Bitcoin as opposed to buying 1 Bitcoin? Of course you can, because it's a percentage gain. If it goes up 30%, you make 30%. If you own one miner, then you make, say, $10 a day. If you own 100, then you make $10 times 100 a day. So you can still make money, absolutely. Obviously, naturally, people that understand economics, there's economies of scale. If you buy 1,000 miners, you might get a better price per miner than you did buying one. So there is definitely an advantage of going a larger scale there. Of course, as I mentioned before, the compounding mining strategy. If you start with 100 miners and you earn $10 a day in your first month, you'd be able to buy 10 miners and take your farm to 110. Whereas if you only start with 10 miners, you only be able to buy one and you've only gone to 11. You're not going to get that compounding effect as fast. And then on the other side, if you start with one miner, it might take you 10 months before you can even compound out to your next miner. So the larger you start, the more the compound effect has an effect. If you follow the compound strategy, but by no means can you not make profit by just starting with one as opposed to starting with 10 or 100.
I'll ask a question, because you're in behind the scene with the mining, with the price. Like, there's a lot of price predictions from people. Alex Saunders himself also has an indication of 100,000 within 5 years easy.
Mm-hmm.
Raul, the real vision person says $1 million in 10 years, is it?
Yep.
So much variation, so much, and these are people who are quite active in the space as well. So is that possible? And what will get Bitcoin there? Like, you don't need to, as you say, under 20,000 USD or 27 Australian. So people are right now, newcomers, are already thinking that's expensive. Like, that's already hard to get in, let alone later. So can you just share with us your thoughts and your, not price prediction, but your opinion of where it could go and what need to happen for it to go to that level?
For sure, yeah, and it's a really good, it's a good topic of conversation, because I think back in 2017, when the number Bitcoin can get to $100,000 was thrown around, people were like, "That's crazy! It's not possible!" Like, it
crazy right now.
Yeah. For someone like myself, for someone like Alex, for someone like Raul, it is more than achievable. Like, you need to
share with us the normal people who are starting to get interested.
For sure. And I think the easiest way that I can help people to understand why, and by no means am I shilling and saying it's going to get there. Like, I have my reservations, believe me, there's heaps of things that could make Bitcoin go lower. But at the end of the day, it comes to, are people willing to adopt it and accept it and realize it as a strong storage of value? That has moved from no institution saying, no, we're not accepting it, to Facebook coming out and saying, we want exposure to cruiptocurrency, to, a whole, I could list 100 different companies.
PayPal recently.
PayPal, Citibank have made their projections. All these people coming out and saying, yes, digital assets and actually being able to see things on a ledger and blockchain, all these things are more transparent than the current system that we're in. So that's the first bit to understand, is it is actually starting to be accepted and adopted, and it needs to be for these price projections to be hit. The second thing to understand is there's only ever going to be 21 million Bitcoin. And if you compare it to the gold market, for example, imagine being told that, no, it's never going to be possible for gold to be found on asteroids outside of the universe or outside of in space, or no, there's not any more gold left in the ground. Everyone would go, oh my God, this is the only gold that's left. I need to get some, and the price would shoot through the roof. So the fact that Bitcoin has a limited amount of supply, and that supply is known, is exactly, as long as adoption continues and people are willing to accept it, it should technically only go up in price. Basic economics, if you limit supply and increase demand, then price will go up. So that's the biggest thing to understand when people are throwing out these numbers of projections of 100,000, 200,000. At the end of the day, if you can't buy it and it's like, there's no Bitcoin on exchanges, then you're going to have to pay a premium if people are willing to sell it. So yeah, that's the easiest way I can understand. The first thing you need to accept or be comfortable with is that it is being adopted. And the second thing is that the supply is severely limited.
My last part of the question is, what's to say that currently it is adopted, and then let's say the sister Bitcoin or someone, a Libra, comes out and becomes better, and then Bitcoin then no longer has the number one spot.
That's the biggest risk, right? So that is why I personally would never say in 5 years' time, Bitcoin's getting to this price, because so much can happen. In 5 years' time, the US dollar might not be existent. It might collapse. Who knows what's going to happen in 5 years' time? But ceteris paribus, or all things staying the same, with the amount of adoption increasing in the long run, we should see, if people are willing to continue adopting it because of that limited supply and the reduced amount of Bitcoin being injected into the economy. We can talk about the Bitcoin halving if we have time. It's basically a supply and demand thing. It's just reducing the amount that's available and increasing the amount that people want to own or have exposure to it.
We have a little bit of time, so maybe touch on that halving that just happened this year in May.
Yep.
And what that meant to price and then supply of Bitcoin.
Yeah, I think personally, when I started to understand, as you said, there's property cycles, which I don't know, people have read The Secret Life of Real Estate and Banking, but it explains there by Anderson that we're in 18-year cycles, and it speaks about why with credit pinches and liquidity and the rest of it. With Bitcoin, the cycles for me are strongly determined by the Bitcoin halving cycles, okay? And essentially what the halving cycles are is, as I mentioned, when Bitcoin first came out into the ecosystem, Satoshi mined the first coin. And I probably should know this off the top of my head, but I don't know the exact number per block that was released, but that starts to halve every 4 years. Yeah. At the moment, before this last cycle, we were sitting at about 12.5 Bitcoin. It was the amount of Bitcoin that's being rewarded to the miner who creates the next block. And just recently, in around about March or so, we had a halving, okay? And so when a halving occurs, that reward, rather than it being 12.5 per Bitcoin, has gone down to 6.25, half of the reward. So now, there's not every 10 minutes, which is how long a block takes to be mined. There's not 12 Bitcoin going out into the ecosystem, which people could then buy and trade, and there's more supply. There's only 6.5, and then in 4 years' time, that's going to go down to 3 point, half of 2.25. You know what I mean? And so basically, what I'm getting at is right now there is about getting close to 19 million Bitcoin in circulation, which means there's 2 million left in reserve. And those blocks, when they're mined, it comes out of the reserve and goes into circulation. Mm-hmm. It's going to take, I think, around about another 110 years for all of those, that last 2 million Bitcoin to be mined, because it will be, 3.25 and then 1 point, and then there'll be such a small amount going out that last bit halving will take so long to get out. And that's pretty much what for me determines the market cycles. In between those 4 year periods, you have Bitcoin it accumulates, it goes drastically up, you get a bit of a bubble, it crashes, then it goes up again, accumulates, goes drastically up, and then comes back down on a linear type or exponential linear type of scale. And if you look up the Wall Street cheat sheet, it's not new news. That's how new markets tend to cycle. They have these, I'm going to get rich, I'm going to be poor, I'm more comfortable with this, it's happening again, and then it goes in a cycle again. For me, for Bitcoin, the time period between that full cycle is around about 4 years, and it's between each Bitcoin cycle. And after the reward is reducing, the price is going from, at the start of the cycle, it started at say 5,000, ended at 20,000, went down to 15, goes to 25,000, ends at 20, and then it will keep going up like this. So that's where I get my cycles from. It's from the Bitcoin halving.
Yeah, it's like property cycles, but it's 18 years. Well, this is more 4 years. So to understand all that, did you have Phil, did you want to have a question with him? Or otherwise I'll keep on going with my price.
Will, you mentioned that Bitcoin's paid out, but I guess my question is, like, so people understand that whoever's mining at the time, that computer or that address, whatever, gets paid that Bitcoin. So how does the rest of the network gets paid? Like, you got one and you got like literally millions of computers. How does it?
Great question. So for me to explain this one, people need to understand the difference between solo mining and pool mining. Okay. And the best way that I can give this analogy for the average person to understand is compare it to going to a raffle ticket event where there's 1,000 raffle tickets being sold and you want to just buy one ticket for $1. Okay. Now you've got a 1 in 1,000 chance of winning, and say the prize is, 1 Bitcoin to keep it simple. So you then go back to your table and you sit down and you're kind of talking to everyone. You're like, 1 in 1,000 chance of 1 Bitcoin, which is worth 26,000. Why don't we all pool our tickets together? And, we've got then 100 tickets. And then if our table wins, because it's 100 tickets and I put in 1 ticket, then I'll have 1/100th of the reward rather than, trying to gamble and have a 1 in 1,000 chance of $26,000. Okay. That's the exact same thing with mining. So what happens with mining is I can buy a Bitcoin miner and I can try and solo mine, and I can hope for the dear life best of me that I will eventually win 1 block, which probably will never happen because there's way too much competition on the network to win that block. Or what I can do is I can contribute my hash power to a mining pool. And if that mining pool wins a block, then I will get the respective payout of the amount of hash rate that I contributed to the mining pool compared to how big the mining pool is. So if I'm contributing 100 terahashes and there's 1,000 terahashes on that mining pool, then I will get 1/10 of the reward when the mining pool wins. Okay. And that's basically, there's probably 5 or 6 huge mining pools. The mining pool that we use is called F2 pool. And that's why you can get consistent daily payouts of $3 to $5, is because it's winning so many blocks every day, because it has so much of the network's like 50, 60 or 30% of the network's total hash rate. It can give you a regular payout because it's regularly winning blocks and distributing the payouts. So hopefully that helps. Hopefully, the raffle ticket idea, and it's all about probability, and you can solo mine. And if you got lucky and just won 1 block in 5 years, which again, probably wouldn't happen, then you would get return on investment plus all your power. And if you got it in your first week, you'd be laughing and, go and buy a couple more in solo mine because you're a lucky man. Hopefully that, explains this idea of, how do I actually mine the block, and how do I get paid out?
I was just listening intently before. So I just want to go a bit deeper on my question before about, the cycles, the price, but you never gave us a price prediction answer where you expect the top will be. Because I think with the other halvings, I studied the charts, that's about 1 or 18 months after the halving date. Mm-hmm. And why is that? And that it gets to the top at that time?
Yeah. Again, if the viewers type in on Google Images Wall Street cheat sheet and just have a look at how market cycles tend to play out, you'll see at that around about 1/4 of the market cycle, which is approximately 18 months, or a little bit. 18 months is a bit more than 1/4 of the Bitcoin cycle. Remembering that the Bitcoin cycle is 4 years and the 18-month period is around about here. If you look at that Wall Street cheat sheet, you get that kind of accumulation and then that parabolic run. And that's around that 18-month point, is that top of that parabolic run. And then it'll come back down, it will accumulate, come back up, accumulate, and then start of the next cycle and it will go back up. So for me, and by no means is that like 100% correct answer, but it makes sense. And I like to look at how markets have performed previously, how the gold rush played out, how stock rallies, how property markets, how the 2008 GFC collapse, These are things that we look at to understand the current market that we're in, but we need to understand there's different circumstances in each market, the property market and the rest of them as well. But yeah, that would be my reason. I can give a prediction. I'm not going to go for in the next 3-5 years, but I strongly believe Bitcoin, I think its fair value is at the moment between 35 and 40,000. I do believe that we will...
USD or AUD?
USD, yeah. So if you want to convert it, 0.7 of that, that's where I think Bitcoin is going to reach within the next kind of year or so. That would be conservative for me. It could easily reach 100,000. It's possible that Citibank, those leaked documents, which I don't even think are real, but they're predicting 310,000 USD. It's possible. It only takes like a country's currency collapsing and then wanting to adopt Bitcoin as a potential currency, or for a big institution like PayPal. If you look at how PayPal's adoption in the market has affected price in just the past 2 months, as soon as they came out and said we're supporting it, we've gone up like $8,000 US, 60 or so percent from one big institution, and they haven't really even properly rolled that out yet. So yeah, that's where my prediction is, conservatively between kind of 30 to 45,000.
That's in 18 months, yeah.
Within a year, I would probably say.
And you mentioned about dollar cost averaging, so you can't really time the bottom or the top. So do you want to explain a little bit for those who are not familiar with that?
Yeah, of course. So dollar cost averaging is, okay, you've got $10,000 to invest in the market, and you get up the exchange, and you might want to buy miners, you might want to put it into Bitcoin. Let's say for this example, you want to put it into Bitcoin. And you look at the price and it's sitting at all-time highs, and you're like, oh, I don't really want to put my whole $10,000 in now, because if it crashes, then I'm stuffed, so to speak. So instead of doing that, you could put in $1,000 now, and then I'll see what happens in a week. Okay. And a week goes by and Bitcoin drops, $1,000 in price or $2,000 in price. And you're like, well, it's gone down. I may as well, put another $1,000 in, because that's a better position. Your average price that you've picked up Bitcoin, if you picked it up, $1,000 at 20,000 and $1,000 at say, 18,000, you get an average price, between of $19,000 approximately that you've picked up Bitcoin at. So that's what dollar cost averaging is. You can do it with trading, where you go, you might just do it simply and go, every paycheck I get, I'm going to put $1,000 in or $500 in. And you can make that an automated process with mining by getting a Bitcoin miner and just letting it every single day pick up little bits and pieces of Bitcoin at different prices. And then you get this kind of, rather than a chart that looks like this, your average price kind of squeezes down and looks more like this. And so that's the beauty of dollar cost averaging, and the beauty of keeping it passive is you don't let your emotions get in the way.
So I've had a lot of clients asking like when to buy the next dip, but the dip is always bought very quickly.
Yes.
So there is a lot of YouTubers are saying there's a buy signal in the next few weeks or few days. Is that something you've heard or is it like, what's this buy signal that people keep on?
So basically what that is we have increased Bitcoin's price exponentially since that PayPal announcement. And what you tend to see in markets is you after you have such a big run, you get people wanting to take profits and you get a cool off in the market. So that combined with us nearly reaching we did reach the all-time high price Bitcoin's ever been at. There's plenty of people kind of willing to take profits here. But the reason why that dip happens and it gets bought up so quickly is because there's also plenty of institutions who are willing to buy Bitcoin now, or new retailers. Although we're at all-time highs, we're also at the start of a new Bitcoin cycle. We're only a couple months in from the recent halving, and people are not looking at $20,000 in 2017 and saying that was a high price. We're in 2020 now, and people are saying, well, it could get to 45,000. So I am willing to buy here. There are more complex reasons as to why these big flash crashes occur. You need to understand a lot more complex things about how margin trading works on exchanges and the leveraged positions that people are in. We won't go into that now. That's why people say there will be a buying opportunity because people will be taking profits, and it's part of the cycles. Markets don't just go up or down, they have pullbacks.
This is so wonderful, Will. And this is what it's about, getting this type of information. When they join the community, your community, this is the type of thing that you talk people through. And you've got yourself and other experts that you bring in that can talk about the market. You're moving in, not just into the trading arena as well, from what I see. Is that correct?
Yeah, absolutely. So yeah, something we probably haven't tapped on a lot, a little bit, is that community that we run, and the conversations that I'm having now with you guys. They're questions that constantly come up through our Discord channels. So there's various channels in our Discord community. There's one for Bitcoin trading. There's one for altcoin trading. There's one for FPGA mining, general knowledge, articles, updates, news on exchanges. All of this information is categorized in our channel. And our members can, simply go in there and ask a question, and other members will answer. I post videos about my charts and where I see my price predictions and what's happening in the market. At the end of the day, you can't consume everything that's going on in
There's so much out there. It's just crazy.
There's so much going on, and it changes every day. When you've got another full-time job, other investments, kids, family, the rest of it, you need to be able to rely on people who are trying to help each other in this space. And that's why we kind of founded Mining Stories, to we monitor it. If people are not helping people, they're not going to be left in the community. We will politely remove them and tell them why, or give them a warning. But it's really for constructive feedback and efficiency, to save people having to read huge articles. They can simply just put in a quick question, and maybe someone, if it's a complex question, will give them the link to what they're trying to find, or they'll just quickly answer it, and a conversation will start on it. Some people just want to follow the Bitcoin trading channels, and that's all, and that's fine. But there's plenty of content in there, and you can pick and choose what you want to pay attention to. I think the main point is it's non-biased. If you go on the internet, usually an article is being put on there because they then want to lead you to some sort of their service, and everything they're saying in that article is biased towards what they want you to hear. Whereas the Mining Store Discord, it's more about, okay, this is the question, let's have a debate on it, and then people can form their own opinions.
I got so much value out of that today, Will. Yourself, Lan?
Yes, I'm definitely extended my knowledge onto mining and how and other ways to get exposure to Bitcoin. So I've only bought through CoinJar or CoinSpot, but I think trading is my next goal, and then obviously and understanding the cycles, because I'm more a property investor, but certainly moving to crypto, which I think is going to be the next 18 months, as you say. I agree, is the one that's going to dominate the market.
That's good. Well, I really appreciate yourself, Phil, and Lan, for having me on the show. I'm always willing to put time towards anyone that's educating people and helping people actually understand things, and not just throwing a message that's biased out there. So for your members as well, I'm more than happy to offer a 30-day trial to our community side. At least that gives people a chance to jump in and experience it and meet the right people and be guided by the right people. All power to you if you get into the mining, or if you go the long-term hodl or whatever it is. Yeah, we're always there to help.
Oh, thank you so much, Will. That's absolutely fantastic. But if people want to know more, where can they best find you and find your team?
Yeah, absolutely. So miningstore.com.au is our website. You can head on there. If you're interested in booking a 30-minute strategy call to help set up with the mining side of things, at the top right-hand corner, there's a book a call now box. You can head there, book in a time with one of our experts or myself. And then if you're interested in just getting involved with the community and getting more trading ideas and the rest of it, you can easily find that on the website as well. You go to services, and then you can go to community, and you can start your membership access there.
And we'll put a link down in the comments as well, and how they can get their 30-day free trial through us. And that's absolutely fantastic. Information you gave today, Will, was really something. It gave a new perspective, a whole side of digital assets that most people aren't even aware of. And you gave it in such a succinct and informative way. It was fantastic.
No, that's good. I'm glad. Hopefully people took something away from it. If you don't, read over, watch the video again, the bits you didn't understand, or join the Discord community. It can help you out there.
Okay, Will, thank you for your time. And we'll continue with our journey with our entrepreneurs, and we'll find out what's the next best thing.
Take care, guys. Thank you very much.
Thank you.
Bye.
Bye.
Bye.